Hey everyone, welcome back to the FX Geek. So, I've been digging through tons of brokers lately, reviewing their platforms, features, and even their little marketing tricks, and something kept popping up. I noticed that a lot of traders, especially beginners, are making the same mistakes again and again. And believe me, these mistakes aren't just small slip ups, they're the kind of mistakes that can blow up accounts and destroy confidence fast. So, today, let's go through the top 5 beginner mistakes in Forex trading, and more importantly, how you can avoid them. The first big mistake I see everywhere is what I call the 10 pips a day obsession. You hear it all the time. I just want 10 pips a day. That's not greedy, right? The market moves 100 pips a day anyway. Here's the reality: the market doesn't care about your 10 pip plan. Market conditions shift all the time. Some days you'll catch every breakout, other days it'll be stuck in a range or reverse against you without warning. If you're focused on making a fixed number of pips every single day, you're setting yourself up for frustration. What you should focus on instead is adapting to market conditions. When the market is in your favor, take advantage and let your winners run. When it's tough, survive and protect your capital. The goal isn't 10 pips, it's profitability over time. The second mistake is a classic: trying to go full-time with a $1,000 account. I get it. Leverage looks like magic. Brokers advertise 1 to 500 and suddenly that $1,000 feels like you're trading with $500,000. But what they don't highlight is how leverage will also magnify your losses just as fast. Without proper capital and proper risk management, your account can disappear faster than you can say margin call. Trading full-time isn't about flipping small accounts with high leverage. It's about consistency, skill, and enough capital to weather the storm when things don't go your way. Now, this next one I see all over the place: falling in love with indicators. Don't get me wrong, indicators can be helpful, especially for managing trades or spotting general trends. But beginners often rely on them like they're some kind of magic crystal ball. Here's the truth: indicators are just math applied to price. They're always one step behind. If you want to really understand the market, you need to read price action itself. Indicators can support you, but if they're your only decision-making tool, you'll always be chasing rather than leading. Moving on to mistake number 4, micromanaging your trades. This one is sneaky. You take a position based on the daily chart, but as soon as things slow down or pull back a bit, you drop down to the 5-minute chart. Now you see noise, random movements, and you start second-guessing yourself. Next thing you know, you close your trade out of fear, only to watch the market hit your original target right after. Stick to the time frame you used for your entry. If you trade out of the daily, manage it on the daily. Don't let lower time frames trick you into bailing early. And finally, mistake number 5, obsessing over the win rate. Everyone wants a 70%, 80%, or even 90% win rate strategy. But that's not the full picture. You could win 9 out of 10 trades and still lose money if your losses are way bigger than your wins. What really matters is the relationship between your average win and your average loss, your risk to reward ratio. A 50% win rate with a 2-to-1 reward to risk can outperform a strategy winning 80% of the time, but with poor payout ratios. Don't get blinded by high win rates. Focus on the complete picture: how much you make when you win versus how much you lose when you're wrong. So those are the 5 mistakes I see again and again, both when I review brokers and when I talk to new traders. These slip-ups are what hold most people back. Focus on adapting to market conditions instead of fixed pip targets. Don't rely on leverage to live the trader lifestyle too soon. Learn to read price, not just indicators. Trust your chosen time frame. And remember, it's not just about winning often, it's about winning well. If this video helped you spot some of these mistakes in your own trading, let me know in the comments. Have you fallen into any of these traps before? No shame, we've all been there. And if you enjoyed this breakdown, make sure to smash that like button, subscribe, and stay tuned, because more broker reviews and trading lessons are coming your way, right here on the FX Geek. See you in the next one.